Had some positive feedback on our webinar for the outlook of 2025 as far as the local housing market goes. In case you missed it, I'm going to give you kind of the down and dirty or the Cliff Note version. Home prices continue to rise, but maybe not as fast as some of those sellers are hoping they will. And this is why we're seeing some houses linger on the market for a while and price drops. Well, let's take, for example, in January of last year, the mean home price, the average home price, was about $407,000 in the Richmond market. While in December it was over $466,000, and we do intend to see probably about a 4 to 4.5% appreciation in 2025. So let's kind of move on to the fact that we have interest rates that really, well, they're not where we predicted them to be this time last year. Interest rates going into 2025 are 30-year fixed average. National numbers are running right around 7%. Most of what we're doing is build a little bit lower. We are expecting those rates to creep down, but not significantly, maybe even touching just below 6% the second half of the year. And when we did see that happen for about 10 days in 2024, we saw a significant uptick in volume and competitive offers driving prices up. So what that means is when rates go down, it does not mean that the houses become more affordable or the payment does not necessarily mean it goes down. We are predicting interest rates to come down some, probably going to hang out somewhere in the mid sixes most of the year, maybe a little bit closer to six and maybe for a short term, just shy. But we feel like that seven or just above low sevens is probably going to be the highest we're going to see. Now, politics on everybody's mind. We've got a new president, a lot of news out there, mostly positive for our industry or for real estate as a whole. Less regulation means it'll cost builders less to build houses. It'll cost realtors and lenders less to sell houses. Those savings will get passed on to consumers, as well as some more financing products will probably come out of the fact that Fannie Mae and Freddie Mac have a good chance of becoming private again. Now, some negatives there. Mass deportation may create a rise in labor prices, but probably a reduction in government spending, which is inflationary, which may drive some prices up. Home ownership throughout all this is the best way, the most successful, proven way to build wealth. While we do see some price fluctuations over 5, 10 years, home values always go up. You have to live somewhere, so why pay rent, pay someone else's mortgage payment? And while you're paying the rent, your rent goes up while mortgage payment, principal and interest payments remain the same or possibly go down if you refinance. So it's a great hedge against inflation, leaving you extra cash flow to invest. So there's plenty of opportunity out there right now in real estate, whether you're looking to buy a new house, move up, move down, buy some investment property. If you want some more information to see if something like this may make sense for you, if it makes sense to do something now or to wait and have a game plan to do that, give us a call. Take care and hope to see you at our next webinar.